My fear is that uh, the financial collapse has become people's financial plan. And so until it happens, nothing good happens for them. Like it has to crash for them to have something good happen to them. Whereas, a lot of people could be making a lot of money right now and then make money in the crash. So it's like, you know, I really want to help people to understand that, you know, you can make money both directions. When the market's going up for no reason, you can be making money doing that. And then when it starts to crash because it's overweighted in debt, then you can make money on the downside too. And I just really want people to not live in fear. I'd rather them be a little more in control.
As a responsible person with growing concerns for your privacy and personal liberty, you want to know where we're headed and what you can do about it. We ask the experts what you need to do to take prudent and responsible action to safeguard your family's wealth and well-being, and what basic first steps will help you to be aware and prepared. ReluctantPreppers.com.
After I order gold or silver, how can I trust I'm going to get it? And I don't want everybody to know that I'm ordering gold and silver.
Oh, it's okay. It's fully insured. It's trackable, and you have to sign for it, so nobody else is going to get it but you. And it comes discreetly packaged. If you order a small amount, like maybe gold, it'll probably come in a box that looks something like this. Okay. And if you order a large amount, maybe like silver, it'll come in a box that looks something like this.
Wow.
But it doesn't say gold or silver on there. It might say something industrial or something else like that, but nobody's going to know what you ordered.
Oh, that's great to know.
Your first ounce of silver is at spot price, and you get free shipping on any order over $99 at sdbullion.com/RP. Reluctant Preppers provides educational awareness and commentary only. Opinions expressed do not constitute personalized financial advice. Viewers are encouraged to do their own research and seek qualified personal financial consultation before making investment decisions. Welcome back, Reluctant Preppers. This returning guest has been with us before, but not for several months, and this is the first time ever by video. Jerry Robinson, author of Bankruptcy of Our Nation and founder of followthemoney.com, is here with us again on Reluctant Preppers. Jerry, thanks for joining us again.
Oh, it's always great to be here. Thank you so much.
When I had approached you about this interview, you agreed to come on with a topic that's, I think, going to be meaningful to a lot of our viewers, and certainly, I think, well up your alley. And that is, you talked to us in the past, maybe over the past year and a half, about this bubble of various assets and markets that we're in that you called the everything bubble, because sometimes there's been stock market bubbles, but not in also in real estate, and then also in cryptos or in also in the bond market, and on and on and on. And as people have been watching this thing be miraculously, unnaturally sustained month after year after so on, people feel that there's this sense of this imminent, sort of this permanently imminent collapse. And yet it just continues and continues and continues. We saw some volatility over the last couple of years in the stock market, but now we just broke through new highs in the S&P 500 today, and so on. So can you talk to us about, are we on the verge, are we on just this on-ramp to infinity that Trump and the central Wall Street banks and so on can just keep printing our way to where we'll be in territory that we've never been before, as far as the eye can see? Or are we truly at greater risk than we've ever been before, and people really need to be making sure they've got a plan B in place? Can we just start out from that bubble of everything?
Well, maybe you're right on all counts.
Okay.
Maybe all of those things are correct. Maybe perhaps we are in a place that we've never been before, which is true. Maybe we can keep going higher. Maybe that's true. Are we in the worst shape we've ever been economically, financially? Oh, by all stretch of the imagination. There's no doubt about it. I've been studying the economy now for going on about, I would say, 15 years steadily, just studying the economy and studying economic history and monetary history. Wrote a book on the topic and have a website focused upon teaching people how to understand the overall economy. And it is interesting to see that the stock market did break out to brand new all-time highs. The S&P 500 broke out to a new all-time high in the wake of the Federal Reserve nudging markets higher through its language. And this is not anything new. This is what the Federal Reserve has been doing for quite some time. And what's interesting, though, is that we're seeing the Fed build the case, I should say, for the first interest rate cut in a decade, right? We saw the Federal Reserve begin slashing rates in response to the 2008 crash. They got rates down to zero very quickly and left them there for practically a decade, or nearly a decade. And what we've seen over the last few months has been, especially since January, we saw the Fed underneath Jerome Powell begin to shift policy and begin to talk about how they were going to pause these aggressive interest rate hikes. Really, quite frankly, in response to the market cratering in December.
Right.
So the Fed really does, the Fed often talks about how it focuses upon economic data and it looks at all of this really important economic data. But in reality, the Fed is kind of a magician. It's really designed to stoke the wealth effect. And so the day that you wake up and open your mailbox and you see your IRA statement or your 401k statement and it's going down, this is when the Federal Reserve realizes that it needs to change its policy. So we've had poor economic figures now for some time. The Fed has been raising rates despite those poor economic figures. But it wasn't until the stock market and the bond market also began to have trouble that the Fed suddenly began to make a policy U-turn. And that's what we saw most recently at the June FOMC meeting, was the fact that the Fed has, in essence, not only decided that it's no longer going to just remain on pause of rate hikes, but it's actually considering and building the case for the first rate cut in a decade. And what that says about the economy is all you need to know. For those listening, you have heard from the White House that this is the greatest economy ever. There's never been a greater economy in the history of mankind. That's what you've heard. You've heard lower unemployment rates for African Americans and for Hispanics. You've heard all of these different all these different data points cherry picked and put out to the public. And yet, what you also are faced with is an economy that cannot sustain a 2.5% interest rate. The Fed is worried about an economy, the greatest economy ever, that cannot sustain a 2.5% interest rate. I don't know. How does anybody even make any sense of that? The average interest rate going back for the last several decades, going back many decades, is about 5.5%. That's the average interest rate. So we're well below. We're still artificially low, and the fact that these artificially low interest rates are threatening this economy, the greatest economy ever, according to the Trump administration, is quite staggering. I mean, 2.5% interest rates, that's paltry. That's nothing. I mean, that's very, very small. How could that possibly be a threat to the economy? How is it that the Federal Reserve needs to cut a 2.5% interest rate? How is that too high?
Yeah.
And I think the answer is that we are suffocating in debt. Our debt growth here in the United States far exceeds our economic growth. So our economic growth rate somewhere around 2% per year. Our debt growth rate, our national debt's growing at many times that every single year. And so we're suffocating in debt. And the only way to keep the facade, to maintain the facade, is to cut interest rates because everybody's in debt. So Yeah, I think that's ultimately the answer. The Fed is going to lower interest rates. We see lower interest rates going back to zero. Quite frankly, that's what we're prepared for. That's why you see gold shooting up right now. Gold at $1,400 as of this recording, breaking back above the 1350 resistance level that had been such a key resistance level for so many years. You also see stocks breaking out. We're back in Goldilocks era where stocks go up, gold goes up. Now, the question that you raised is how long can it last? John Maynard Keynes said that the markets can remain irrational longer than you can remain solvent. And I think that's an astute observation. I think that the market could certainly continue to move higher despite a very weak economy. So, yeah.
That's sobering, and it leaves people wondering what options they should do to make sure that they're covering their bases. One aspect of that that a lot of people are thinking about is, you mentioned, for example, debt. A lot of governments being in debt, and that's not only at the sovereign level, but also at the state and municipal level, and so on, and it's worldwide. Durfman asks, what is your outlook on Social Security? We all know about gold, silver, cryptos, but what about Social Security? Do you see it going away?
Well, Social Security is a socialist program, just as is Medicare, just as is Medicaid, just as is the United States military. Probably the most biggest socialist paradise in the entire world is the United States military. Free tuition, free childcare, free housing, free health insurance, single payer. The thing that scares the bejesus out of the capitalists, they give to the military with no fear. Public education is socialist. So when you bring up Social Security, you can't leave out the social aspect of it. One thing that we're going to hear in the run-up to the 2020 election is going to be this constant barrage of socialism is creeping and it's coming for America. Socialism versus capitalism, right? The capitalists are here to save the day from the creeping socialism. The socialism is pervasive throughout America. We're a mixed economy. We have a lot of socialism in our economy. And if you try to take the socialism away from the United States capitalists, they would be in the streets. So, first of all, the whole Social Security issue, brings, and many people would say, well, no, Social Security is not a socialism. It's not socialism because I paid into it. I paid into that. I'm just getting my money back. And if that's the case, then perhaps people can sign a waiver that says, do not pay me any more than what I paid into the program, plus maybe some interest to cover the time difference. In reality, in Social Security, most people get much more than they paid in. Even the same way with Medicare. And this is why, if this was not happening, then you would not have the system crumbling. That's why the system has to be reformed, is because people are simply living too long. They're paying in too little and taking too much.
Are you not subscribing to the principle, or what we've been told is that there was actually like a rating of the Social Security Trust Fund? It was used to cover general expenses or balance the budget during the Clinton years or whatever. Was it, you actually believe that it was, and I'm just asking sincerely, that it was actually payouts to retirees? That's what's been depleting the funds that were paid in by earners and workers?
I'm sorry, I lost that very last part of your question. You said, do I believe it's what?
That it's actually payouts to retirees that is depleting the Social Security system primarily, and not that funds were diverted to other government purposes over the years.
Well, I think there's a mixture of both. The Social Security fund is expected to run out, the actual trust fund itself is expected to run out, I believe, I want to say 2032 or something. I saw the latest year not too long ago. It was 2040 in 2009. It was 2036 in 2012. Now it's around 2034 or 2032.
2030 was the last thing I saw. Yeah.
2030, yeah, somewhere around there. So no, I mean the money that's been paid in has obviously been misallocated by the government. There's no doubt about that. What I'm suggesting to you is that that Social Security itself is a form of socialism.
Right.
It's right there in the name. Republicans were the ones who were trying to prevent Social Security in the 1930s from becoming reality. Ronald Reagan in the 1960s vehemently railed against Medicare because of its single-payer nature. These systems were always known as being socialist until they're practiced, until they're brought into play. And so now we hear about new forms of socialism while ignoring the old ones. But Social Security is in trouble. Will there be enough money whenever you and I retire? I'm not planning on it. I'm certainly saving and preparing to not depend upon the government whenever I retire. I don't think that's true for the people living, who are retiring 5 years from now. But I think if you're retiring maybe 10, 20, 30 years from now, especially, you need to have another plan. It's not going to be there.
Another question
in its current form. In its current form, I believe it'll still be there in some form or fashion, but it won't be there the way that it exists today.
All right, fair enough. Or not fair, but okay. Matthew C. asks, what is the amount of margin debt in the current market? And if there's a cascade event, what is the best and worst case scenario in the financial markets?
Well, there's a tremendous amount of leverage today. Not only is margin debt out through the roof, but you also have corporate debt. Corporate debt is astonishingly high. Want to say around 9 trillion. So you have margin debt, which is high. You have corporate debt, which is just simply astonishing. And of course, as many people know, much of the stock market rally has been due to manipulation through corporate buybacks and whatnot. Mm-hmm. So it's extremely high. And here's the thing. So as a trend trader, what I do is I trade the trend. And so I've been long this market, but it doesn't mean that I'm necessarily agree with the fundamentals of the market. So whenever a particular market is rising, I'll trade that market. I'll be long that market as long as the trend remains intact. And so with stocks, it's possible to go long stocks but not believe in them, right? It's possible to go long on bonds but not believe in them. To do otherwise would be to deny what's happening. I mean, I'll give you a perfect example. There were many people in 2009 who jumped out of the stock market, and we jumped out in 2007, 2008, whenever our system gave us a downtrend signal. But we got back in the middle of 2009, and we rode the market higher. And there were many people during that time who, because President Barack Obama was a quote-unquote socialist, or he was a Muslim, or he was the Antichrist, or he was a woman, or he was gay, or whatever it was, they didn't want to get involved in an uptrending stock market. And so the market kept charging higher, 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 but their politics kept them out. Come 2016, 2017, we saw a big influx of new, fresh money coming into the market because we had a fresh leader. We had a new leader, President Trump. Now, Trump has taken the national debt to new all-time highs. He's taken spending levels. He's taken both of our twin deficits to record highs. The trade deficit has never been this high, ever. The budget deficit, just last May, set a new all-time record. So the people feared about President Barack Obama are actually materializing in the person of Mr. Trump. And yet the stock market, despite both of these men doing exactly the opposite of what they should do for the economy, the stock market continues to rise. So margin debt's been a problem for a long time. Corporate debt's been a problem for a long time, but it doesn't stop the uptrend, because the uptrend is created through faith in the system. And until faith in the system is destroyed, and I don't know what that's going to look like, but until faith in the system is destroyed, the market can continue to be irrational and move higher. So margin debt is concerning, but margin debt has been concerning for years.
So let's follow on with the follow-on part of that question about what is the best and worst case scenario in the case of the financial markets?
The best case and worst case scenario? So the best case scenario for the markets would be for the Federal Reserve to stop its pause and begin raising interest rates, to allow the economy to have its little flu, to have its, well, maybe a big flu, to give it a chance to deleverage. Higher interest rates will cause a lot of borrowing and excessive risk taking to dissipate. And I think that's what really needs to happen. The worst case scenario is that we see the Fed move interest rates back to zero. And unfortunately, that worst case scenario is where we see things heading. The worst case scenario really isn't a stock market crash now. The worst case scenario is a stock market crash and a bond market crash after they lower rates to zero again and push asset prices even more artificially higher. Mm-hmm. So actually, technically, a market crash now would be preferable, because the more we keep pushing this market higher through artificially low interest rates and excessive borrowing, it's just going to be so painful. So we see a massive, massive crash coming. I mean, there's just no doubt about it. It's going to be, and the reason why it's so massive is because we've never had a stock market this high in price. So the bigger they are, the harder they fall, so to speak. So it's going to be a very, very hard crash. And what's interesting too is the introduction of cryptocurrencies and what kind of role they'll play as a hedge during this time. It'll be really interesting to see. We know that gold played a hedge in 2008. We already see it beginning to perk back up now that the Fed is talking crazy. But we also have now this new asset class of cryptocurrencies where people can also burrow into as a way to get less direct exposure to paper assets.
There's a follow-on question from M. Miller that says, what cryptocurrencies are you bullish on?
Yeah, well, several. We began buying back in 2013. Bitcoin, we're bullish on. And I know there's, look, when I talk, I know that I'm always hearing the voices in my head of people who might have different opinions. And I'm very sensitive to that. I know that some people, just to reverse course for a minute, I know some people are very politically minded. I'm not, and so therefore, if you have a dog in the fight politically, then I may ruffle your feathers because I don't. I don't have a dog in the fight at all politically. I think both sides are completely bought and paid for by corporations. I don't think either one of them care if you die in a ditch, and I don't think that either one of them give a rip about you. And so, if you think they do, then more power to you. The cryptocurrencies, some people think that they're negative, or they're impractical, or they won't last, or they're a fad, or whatever. I choose not to believe that. I think that whenever I was writing my book Bankruptcy of Our Nation in 2009 and 2007, 2008, at the same exact time there was a fella or institution or whatever group of people named Satoshi Nakamoto who was doing the exact same thing I was doing, except he was creating a solution. So my book I was explaining the problem with the economy, the fiat nature of money, the over leverage that we've created through debt-based monetary system. Satoshi Nakamoto, instead of writing a book, was creating a program, a software designed to destroy the United States dollar. I was trying to expose the United States dollar. Satoshi was trying to destroy the United States dollar because of what he saw as inherently as an inherently flawed currency, debt-based monetary system that's based upon. And so Bitcoin, in many ways, those who are long gold or bullish gold, I often find that many times gold bugs, they don't quite understand what Bitcoin is. It's not gold, but it's really scratching the same itch that gold does. It's attacking the same problem that gold is. And so I believe that Bitcoin over time is going to go much, much higher. We have a cryptocurrency investment report we put out every year, and in the latest one I had written that by 2021, early 2021, I would imagine Bitcoin prices being at new all-time highs. It's going to take some time. We've talked about that extensively on our website. People can look at that, followthemoney.com. But Bitcoin is certainly one that I'm really bullish on. Another one that I own these, by the way, so in full disclosure, that's why I like them. But another one that I really like is Tron, TRX. I've been a long-term holder of Tron since the very early days. This one has done extremely well. We expect it to go much higher. I also like Cardano. Charles Hoskinson, Cardano is the very first cryptocurrency put together by a group of scholars and scientists. Very interesting project that they have. So Cardano is one of our favorites. I know it's very controversial. Some will be very, very angry that I like this cryptocurrency. I can't do anything about it. I've owned it for a very long time, since 2013, and I'm still long, and it's Ripple. That's a centralized cryptocurrency. So it's it's quite the opposite of Bitcoin. And but Ripple has been very good to me since I began investing in it, and I see much, much more room ahead as it gains global acceptance, especially from Wall Street. So Ripple, and then while I'm not bullish on Facebook's new cryptocurrency, Libra, as far as like going out and buying it, it's a stable coin. I am very, very intrigued by what Facebook is doing with Libra, its brand new cryptocurrency. I see Facebook, and I'll even say this, maybe I'll just end it with this. After researching what Facebook is trying to do with Libra, its brand new cryptocurrency, it almost looks like a part two of the petrodollar system. It almost looks like a coup. The more I look at what's happening, in the fact that because Facebook is backed by the US dollar, by Facebook cryptocurrency is backed by the dollar, you're going to have many different people living in other countries, billions of people that Facebook has in their customer database, who have unstable currencies in their home countries. And Libra is going to allow them to have a stable currency backed by the US dollar. It looks like a coup to me. It's very early. I don't know exactly what's going to happen, even how it's going to play out. A lot of unknowns and a lot of ifs. But I would say that's also a very compelling and interesting development that validates Bitcoin. It does not in any way, shape, or form compete with Bitcoin, but it validates Bitcoin. The fact that Facebook has stepped into this trillion-dollar company has validated blockchain technology. I think that speaks hugely to the future of Bitcoin and other, solid cryptocurrency projects.
I wanted to circle back, if we could, to the question of precious metals. BK asks, do you think another Hunt Brothers scenario could happen again? I'm thinking it would be really easy with the right folks behind the scenes. So if you could just catch people up, viewers, to make sure they understand what is he referring to as a Hunt Brothers scenario, and what do you think about the current supply-demand picture in case of physical precious metals?
Mm-hmm. It's a really interesting story. The Hunt Brothers were very, very wealthy individuals who really went bust trying to corner the silver market. Silver market's a relatively small market, again, relatively speaking. So it's one of those markets that if you have a whole bunch of money, or you pool your money together, you could try to corner, hold the supply, and then force the price up. That's what they tried to do. It spectacularly failed. It failed spectacularly, I should say. But as far as that happening again, there's no, that's just totally theoretical, or it's totally hypothetical. I don't know if it would happen again, the chances of it happening again. You would think somebody would learn from the first time they did it. Not to do the supply and demand of silver. I'm not nearly as bullish on silver near term as I am gold. Longer term, I am very bullish silver. I own both gold and silver. Um, but I would say that you do have a lot more silver coming out of the ground every year because it's a byproduct of so many other metals versus gold. So the gold inflation rate, is pretty low. The silver inflation rate's fairly high, and the inflation rate, of course, being determined by how much comes out of the ground every year. How much is the money supply growing, or the total silver supply growing on an annual basis? Going back to cryptos for a minute, one of the interesting things about Bitcoin is that it's controlled supply. So unlike silver, which you may get a 10 or 20% increase in the total supply of silver on a given year, Bitcoin halves every 4 years as far as the total supply that comes on the market. And so one of the things that was created within the Bitcoin protocol was the ability to limit the amount of Bitcoin that could ever be in existence. This is what silver and gold bugs have often pointed to as being the benefit of precious metals, is the fact that they're finite, or they're certainly relatively finite compared to to a paper dollar. Whereas cryptocurrency, and particularly Bitcoin itself, can be programmed to simply be finite, or to be very, very controlled supply at a very low inflation rate. And so Bitcoin, as of next year, May 2020, when the next halving occurs, Bitcoin will technically have a lower inflation rate than gold. So I think some of this cornering of the market could happen, maybe not next time in silver, it could happen in some of these cryptocurrencies, But I think it's an interesting question, but it's purely hypothetical. I don't know.
All right. Back to something that you did mention already is happening, and that's this over-reliance, or at least record level of reliance on debt by various entities. Rob Rage asks, Deutsche Bank has $34 trillion in shaky derivatives. Is it about to crash, and will the other central banks follow like dominoes? Clearly, there is the unknown portion of that, but the question is about the risk, what you think is credible.
Yeah. Deutsche Bank is just I don't want to say anything publicly about Deutsche Bank, but as far as what I think about them, I think their reputation speaks for itself historically. And I think that Deutsche Bank is still large enough, however, to have a tremendous impact if it crumbles. And I think they've already fired their CFO. I think they already are calling for his head if they haven't fired him yet. Could Deutsche Bank crash the overall stock market? It could create the dominoes that begin it. Some of these questions, and they make total sense, but I think one thing to keep in mind is that we just can't know the answers to these things. Mm-hmm. There are so many financial types on YouTube and online who make a practice of making forecasts like these, and then they're wrong, and then next year they make another forecast, and then they're wrong again, and then they do it the next year and they're wrong again, and people keep listening to them. We don't tend to make forecasts of what's going to happen. We tend to just make money off what does happen. So when it does happen, you can better believe that I'll be shorting the markets and I'll be making money from it. As far as forecasting it, I don't know. I mean, do they have a bunch of derivatives? Yeah. Do they have too many derivatives? Yeah. Is it eventually is it a house of cards? Yeah. But as far as predicting it, I mean, I don't know. I don't know when that's going to happen. But I'm sure there's somebody on Zero Hedge or on YouTube who knows when it's going to happen. Maybe you should ask them.
So back to what people can get.
I'm not smart enough.
People who want to get more of your insights on what is reality, what is happening, where can they go, Jerry?
Followthemoney.com is where they can find us. Followthemoney.com, and there they'll find a free podcast. We've done so many podcasts over the years, so many different interviews, great guests. We have a stock trading podcast. We have a precious metals podcast. We have books. We have reports that we put out every year on cryptocurrencies, on different topics. We're really hot on cryptocurrencies, solar stocks, gold mining stocks, ETFs. We like certain technologies that we really like to focus on with ETFs, certain global markets we like. But then mainly, we really try to track what's in an uptrend. And so that really eliminates the noise. I think that's maybe what I would leave with many of your listeners, because when you turn on the news every day and you listen to what's happening, it'll drive you nuts. I mean, you go, and sadly, this is one of the most interesting things. All of the greatest investors and traders that I've studied over the years, and I've studied a lot of them and talked to a lot of them, the majority of them who make the most money in the investment world don't watch the news. They watch the charts. Bernard Baruch once said, "Show me a chart and I'll tell you the news." The news is they're all press release. It's designed to get you off track. It's designed to disorient you. It's a 24/7 cycle. You can never stay ahead of it. It'll stress you out. It'll give you disease, and then it'll make your hair fall out, and then you'll die. The news is not helpful. It doesn't help anybody. You can't do anything about it. My fear is that the financial collapse has become people's financial plan. And so until it happens, nothing good happens for them. Like, it has to crash for them to have something good happen to them. Whereas, a lot of people could be making a lot of money right now and then make money in the crash. So it's like, I really want to help people to understand that, you can make money both directions. When the market's going up for no reason, you can be making money doing that. And then when it starts to crash because it's overweighted in debt, then you can make money on the downside too. And so, yeah, I just really want people to not live in fear. I'd rather them be a little more in control. So the better alternative is to instead try to adopt a different way of approaching the markets. And that's what we do. So we teach a different way, maybe a third way of approaching the markets. And that's what we do at Follow the Money. People can learn all about it there at followthemoney.com.
Jerry Robinson, author of Bankruptcy of Our Nation and founder of followthemoney.com. Thanks, as always, for joining us here on Reluctant Preppers.
My pleasure. Thank you.
Hey, Reluctant Preppers. If you haven't heard, we've already started our monthly 1-ounce U.S. Silver Eagle thank you gift to one active Patreon subscriber each month, signed by your host, Dunnigan Kaiser. And you don't want to miss out on that.
Please help us grow by subscribing today at patreon.com/reluctantpreppers.